Hello guys, this is a pre-market analysis of 20th of May. So we have to look at multiple things today. Firstly, Rupee is crashing and it's around 97. So we are not comfortable with that level. And if you look at the last 1 week itself, it's 2% down and 7% down in the last 2 months, which is not at all good. And because of that itself, everything else is also getting affected. And El Nino warning is there. That means when El Nino is there, monsoon is going to be weak. If you look at last year, the inflation was mainly low because food inflation was very low because we had very good agricultural season, and that was mainly because of a very good monsoon. Now this year we already have the war fear, the petrol price, the fuel price is increasing, and it is now increasing in our petrol bunks also, and we can feel the fire. At the same time, rupee is crashing, and now adding to that, El Nino warning. Because of that, the monsoon can be, not that good. Forget about last year, what we got a very decent, very good monsoon, but this can be not good also. In that case, because of that itself, agricultural productivity can come down. So food inflation can spike because of this itself. And added to that, this fuel price increase also will be a big concern. So future, I don't know what is going to happen. The rate hike possibility is very higher now. So because of this bad monsoon, which is actually predicted, don't know whether there will be any changes or not, but what is predicted is this is going to be a bad monsoon season. Compared to yesterday, it was a very good monsoon. Because of that, we had a very good food availability. There was no food inflation. That is the reason why inflation was stable. RBI reduced the interest rate. Now, this year, monsoon is going to be bad. Agriculture season will be bad. Food prices will naturally go up. Along with that, you have an added fuel issue also, so price may go up, and that will be a big concern. And rates will increase, big concern for the market. Rising bond yield also is another concern. I'm talking about US bond yields is rising. That's another concern. So FIIs are more attractive there only, right? And US Iran uncertainty, that is anyway we were discussing every day. So this is a fresh concern. Rupee is hitting all time low every day, 97, and this El Nino warning. Because of that itself, gift nifty is now indicating 23,400 something, which means around 120, 130 point gap down is what we are looking for. And if that gap down sustain below yesterday's pivot is around 23,500. As long as it stays above 23,500, it's fine. If 23,500 is broken, I think it's opening around 23,500 level. That I'll show the chart and I'll explain. Okay, so if you see, most importantly, yeah, this is yesterday's pivot, CPR, and we had the Camarilla pivot also. Now it is opening here. It is going to open around this level. So there is a possibility that one round of support it can take. That can be a technical bounce, but when things are not that good, if you get that bounce and they fill this gap, that is a beautiful opportunity to sell today, right? So I'm looking to sell on rise. Again, yesterday we had not much better view. We were very flexible on both the sides, and I have shown you with 1 lakh, 1.5 lakh capital how I have made 2 lakh plus profit. Live trades and everything is updated when you were very flexible. Day before yesterday, it was slightly we had a view. So when things are going against your view, you will just stay sidelines. So you may not be able to do much because you cannot be so flexible when you already have a view. Now today I have a view that is sell on rise. So let's see what is going to happen. And then depending upon the market, even if it is sell on rise, when it is trading about 20 MA, we know the market is invalidating our view. So we'll have to shift our view. So here it is going to open around this level. Now, if it stay below this level, this line you can mark, this is previous day CPR and the pivot and the Camarilla pivot. So if it stays below this, there is a high probability that this level can be touched today, which means around 23,300 level can be touched. If they stay below 23,500, at one point it can come and touch this level. From there could be a potential reversal. If that also breaking, then next target is 23,000. Okay. So here main concern is now all-time low rupee, and agriculture issue can be a big one. If you look at it, eighth consecutive session rupee is falling, right? And fresh all-time low every day. Sixth session. Yesterday, it's a fresh all-time low. Day before yesterday, fresh all-time low. And yesterday, it's the record low, right? And 97 USD. I remember last year, this time I'm discussing when rupee was at 82, there is a forecast that rupee can go to 92. That time itself, a lot of discussions and hangamas in the channels when SBI I think SBI have given that study it can go to 92, but look at it, it's 97, right? And closing basis, it's settled around 96.5. It's not good. It's not good in a macro level also, if you look at it, micro level also, if you look at it, the way it is going to affect our lives also, common man's lives also, inflation also, food inflation also, interest rate also. In no way this is, acceptable that rupee, why RBI is not able to do anything is the question, right? If RBI cannot do anything, then why we allow rupee to free float? If we can be like China we will do depreciation and right, devaluation and revaluation. We are allowing the market to decide. If you are so weak, and if you cannot have that control, based on your demand and supply, then we should not allow this kind of free floating of our currency. It can then plummet to 110, 120, 130, because anyway the demand for dollar is so high. So what China will do is their central bank will fix this is the exchange rate. So no matter whatever demand, supply, or anything, that's what revaluation and devaluation. So when they want to promote export, they devalue. When they feel like this is normal, they revalue, right? But in our case, everything is decided by the market. Rupee and dollar is getting exchanged and traded. So because of demand and supply, it just keep on going down as dollar is so high and considered as something like a precious currency. Right. So apart from that, we have the inflationary pressure, energy. India's importing energy, commodities, crude oil, and all those import is also getting expensive because of rupee depreciation. At the same time, because of the war, right? And at this point of time, market is ignoring that risk, I think, and that's the reason why market is going up. But remember, guys, even if we see fresh all-time highs and everything in S&P and US markets and other European markets and Asian market, it is unlikely that our market can go high for quite some time as long as rupee is falling, as long as we don't get a good monsoon. Because when we don't have a good monsoon, we have an inflation pressure, and because of that itself, RBI cannot increase the interest rate, and further liquidity won't be there in the market, and that's not conducive for the market environment. So we are not looking. It could be a consolidation year. If this year it would have been a good monsoon like yesteryear, then there had a potential that we could have gone and touched 27,000 and even 30,000 also. But now chances are looking very bleak. FIIs are selling. For just that last 3 days they bought, FIIs are selling. Rupees depreciating like anything, hitting fresh all-time low. If monsoon is also not good, along with fuel prices also increasing and war is there, the market, you know, you need to wait, right? For if you are an investor, to get that return out of it, you need to wait. But if you are an investor and you are using that margin to trade, then you are doing good. So that's something which I can tell you. But positive side of rupee weakening is IT companies. You can see yesterday IT sector 4% up. Why? Because something related to export, they gain more, because earlier you are getting $100 or $1. Now $1, earlier you got 80 rupee, now you're getting 97 rupees. So your profit in terms of rupee, when you convert, that's increasing. So the profit margin is improving for export based sectors and mostly IT sectors. That's why when rupee is falling, they are the ones who are actually getting benefit. And we have seen that in yesterday, IT stocks have rallied. That could be a value buying also, because IT stocks are already at fresh low. So that is also one of the reason. And I think FIIs are buying in ITs because that's a very good value. Okay, so market is currently rewarding the export-oriented IT sectors, export-oriented sectors, and mainly IT sectors. But if you look at it, banking is seeing that weakness now. Why banking is weak? Because of these concern. FIIs are selling, and the FIIs are selling mainly in HDFC and ICICI. Secondly, rupee depreciation, not good. And then weak monsoon is also now going to affect bank, because interest rate can increase. So they cannot lend more, right? People won't take much loans also in future. So because of that, there can be a reduction in profitability. All these are actually affecting the banks. And if you look at the two largest banks, HDFC and ICICI, have fallen almost 10%, right? And Nifty yesterday almost closed at the previous close itself, right? So these are the things that we need to discuss. Imagine if rupee also reaching 100 per USD, then it's a huge psychological disturbance, right? So watch rupee very carefully. Our market move, I think now mostly depending upon rupee, because rupee is falling means FIA keeps selling. There is no other option for them, because even if they make money from here, 10% they are making here, but 10% you are losing in rupee weakening itself means you're gone, you're finished. Right, better you go with US bond yields itself. You are getting a very good yield. US bond yield is increasing as well. Now, when it comes to US Iran conflict, the mixed signal, it's continuing. There is no major diplomatic breakthrough, no major escalation also. So, now we got habituated to that. Trump was saying something, some peace proposal has been sent to Pakistan, Pakistan mediate and sent to US, US reject it outrightly, and then again you are sending it back, right? So this is how, and now Trump have made a statement that he is 1 hour away from launching fresh attack on Iran, right? And then he delayed also because then he said Gulf leaders requested for a delay, right? So he make a statement that I'm just 1 hour delay for a fresh attack, then saying that I'm just pausing that, delaying that because Gulf leaders have requested for the delay, and another 2 3 day timeline has been given before the next decision. So still, of course, that is an aggressive tone, that is an escalation tone, that's a negative tone, that's not good for the market. And if you look at US Secretary Scott Bessent, he came with slightly more aggressive tone. He said US already disrupted tens of billions of dollars of Iranian oil revenue also. And the additional goal is that now they want to crack down Iran's shadow banking, shell companies, crypto networks, etc. And also made requests to its allies like Europe, Middle East, Asian allies to cooperate more aggressively for, taking down Iran, right? And because see, ultimately what you can interpret and understand is Iran is not willing to surrender. Of course, Iran is not giving what US want also, and then because of that, US actually increasing pressure on Iran. But JD Vance came with some slightly positive tone that that negotiations have made some progress and Iran want a deal. But finally, what I want to tell you is we have seen Bessent, we have seen JD Vance, we have seen Trump statements. All these are mixed, right? So all these are actually giving. Trump is now saying one thing and changing that we are going to attack, we are pausing it. Bessent is slightly aggressive, and JD Vance is mild. So it's a mixed signal, and this is kind of uncertainty, and market don't like uncertainty. Because of this uncertainty, Brent crude is at 111, WT is at 104. Oil is still above psychological level, and oil is still above. In fact, it's a very high level. And if you look at US bond yield also, that's a major concern. There is a, because of the high fuel prices, because of the war, increasing inflation fears is there in US. And I've already seen last inflation data that is high. So US 10-year bond yield is now 4.67, which is good. 30-year bond yield is at 5.18. And these are very high levels, right? So there will be an impact on definitely tech stocks, because normally when bond yields are high, the pressure will be on tech stocks, right? Because of that, Nasdaq have underperformed yesterday. If you see Nasdaq 0.84 negative, and S&P 0.67 negative, Dow Jones 0.65 negative. VIX also increased slightly. It is now about 18. So that market fear is slowly rising again, right? Now, one more additional concern is that, according to some reports from Bloomberg, NATO countries are discussing some military assistance for ships passing through the Strait of Hormuz. Earlier, if you remember, Mr. Trump have requested NATO countries to give that assistance and send your warship to protect the ships through Strait of Hormuz, but they denied it, they didn't allow it. But now they're discussing about that, and already UK and France have sent their warships to that area, and UK is already planning jets and drones and warships already. So the peace talk is happening on one side, but at the same time military preparation is also increasing, and it can spread. See, think about it. If NATO is joining, or if UK and France is also joining in hand with the US, definitely Russia, I don't think that they will sit silent. And if Russia will be assisting, then China, these two will definitely come together along with Iran, right? Because they have strong, bond, right? And if these two are there, where North Korea will, how can they sit silent? Now, if you look at Gift Nifty, it's at 23,420 level. So we are looking for a gap down opening of around 23,450 below that level, which I have told you. So maybe 100, 120, 130, 130, 150 point gap down is what we can expect. But of course, there can be some mild changes depending upon the liquidity in our market and Gift Nifty. Okay. Now, banking sector, the weakness is continuing. HDFC Bank ADR is 1.5 negative, ICICI is 2% negative. And that's a fresh weakness which is coming in banking sector. IT sector, this is a value buying is what I consider. Even I also bought at very lower level, TCS and Infosys and all at very low level. So it's a value buying, and investors would be very much attracted at this level. And that's the buying which is happening now. So Infosys ADR is 1% up, Wipro slightly negative, but that could be the arbitrage correction. So final takeaway is banking is looking weak. IT is flat to stable at this point of time. El Nino is a major concern, right? So El Nino formation started in Pacific Ocean. So IMD also projected this could be one of the weakest monsoon, which is probably nearly the 25 years. So rainfall projection is also 92% of long period average rainfall, which is not good. So El Nino plus weak rupee, that's the negative macro combination. Market may ignore this now for today, but that's an upcoming trigger. It's a very important point. Okay. So these are the main things that I want to discuss. Yes, institutional data, FIIs, they turned sellers again yesterday. 3 sessions they bought yesterday, 2,450 crore they sold. DIIs bought for 3,800 crore. So last hour selling might be from FIIs. Let's see what is going to happen today. So we have seen 33% unwinding on calls. That could be because of expiry, and 42% unwinding on puts. And because of that, put call ratio have came to around 1.02. Slight bearish shift we can see, because 1.17 was very good bullish. From there, 1.02, though it is neutral or positive since it's one, but still from where it came, because of that, it is a bearish shift, right? So otherwise, things are looking perfect, fine. Technically, we have already discussed yesterday and just before also. So the major support level is 23,500. That's where it is opening. So next level is 23,300, and then 23,200 and 23,000. Resistance, I'm not looking much today because 23,600 could be a important resistance. And then yesterday, the fall almost from 750, but 700 can be a good resistance again. So yesterday it was an expiry game. They wanted to close it below 23,800, but then towards the end, some selling have also happened. So they managed that range of 23,800 and 23,600 level yesterday. Bank Nifty, the support level 53,900, 54,000 same, and sorry, resistance, and 53,900, 54,000. Support is at 53,000, and it can be like 53,200 range. OI call side, if you see 23,800 is maximum, 24,000 also there. So 24,000 is a major resistance, 23,800. That worked beautifully yesterday also. And then after that, 23,500, 23,700. That's the straddle people. So now today it can come to 23,500 also. Now put side, if you look at it, 23,000 is maximum, and then 23,200, and then 23,500, and 23,500 people may shift to 23,200 levels today. So the bigger range is 23,000 to 24,000 that we discussed yesterday also, for the last week also. Now the smaller range that we discussed yesterday, the same, it happened. And today we are looking for 23,200 to 23,800 itself as the shorter range. So overall, market is balancing at this point of time. Multiple macro risks are there simultaneously, especially for Indian market. You cannot take it for granted if world market is going up, hitting fresh all-time high. We cannot predict that move in our market. Multiple macro risks are there, which is very specific to our market. So main negatives, rupee is crashing. No other countries are facing this. So if you are comparing your move with Dow, DAX or anything, they don't have this issue. Oil prices above 110. They're self-sufficient mostly in oil, but we are not. So we are completely depending upon oil, right? Rupee, okay. El Nino concern, mostly our agriculture sector is what depending upon monsoon. They have their own technologies and everything. So that is our own concern. So you cannot compare, right? Their market move and our market move. They hit all-time high, doesn't mean that we may hit it. We have our own concerns. US bond yield is rising. That may equally affect both of them, but it will affect badly us because FIIs pull back their money and they'll invest there. And banking weakness, that is a fresh banking weakness. These are all very negative. IT strength, that's not much. That is the value buying from the lower area. And because that is export oriented also, people are getting attracted. And US-Iran war negotiations are continuing. That's not positive. That's mixed only. So market sentiment, if at this point of time, if not collapsing, but it's very weak, it is better sell on rise rather than a hope-based buying at this point of time. Sell on rise, that will be better. Do nothing or sell on rise. But yeah, risk is increasing steadily. So keep a watch on all these what I've discussed. And if you would like to learn this, skill, right? Trading, live market, we have the mentoring program. Get in touch with us. We have 4 days live market sessions where you can attend our sessions during the market and you can see what we do live during the market hours. Or we have 1 month program. We have yearly programs also. So try for that 4 days first, and then if it works for you, you can think about different programs also. Get in touch with our team. See you there.